Bitcoin has pushed back into the spotlight with another powerful move higher, but the real story unfolding right now may not be Bitcoin itself. Behind the headlines, a much larger transformation is beginning to take shape across the financial system. One of the world's oldest and most recognizable money transfer companies is now accelerating its blockchain strategy, signaling that traditional finance is moving deeper into crypto infrastructure than many expected. At the same time, a new project called Pepeto is drawing growing attention after dramatically outperforming recent returns seen across both Bitcoin and Ethereum. And as capital begins rotating into smaller, high-growth crypto assets once again, investors are asking the same question that has defined every major cycle in this market. Where could the next explosive gains come from? What makes this moment especially important is that these developments are not happening in isolation. Institutional adoption is expanding, cross-border payment systems are evolving, and speculative capital is once again searching for projects capable of delivering outsized returns. The combination of established financial firms embracing blockchain technology while newer crypto projects capture momentum is creating conditions many analysts say resemble the early stages of previous major bull runs. And if that trend continues, the next phase of the market could look very different from what investors saw over the past 2 years. I'm Pamela, and you're watching XRP News. The crypto market is entering another period of rapid transition, and one of the biggest signals comes from an unexpected source: Western Union. For decades, the company has been associated with traditional money transfers, physical locations, and cross-border remittance services that existed long before digital finance became mainstream. But now, like many legacy financial firms, Western Union appears to be adapting to a world increasingly shaped by blockchain technology and digital assets. This shift matters because Western Union is not a small startup experimenting with crypto trends. It is one of the most recognizable names in global payments, operating across hundreds of countries and handling billions of dollars in international transfers. When companies with that level of scale begin integrating blockchain-related strategies, investors tend to pay attention. It suggests that blockchain technology is moving beyond speculation and becoming part of the infrastructure conversation inside traditional finance. The broader context here is important. Over the last several years, major financial institutions have gradually moved from skepticism toward cautious experimentation with blockchain systems. Banks have explored tokenized settlements. Payment providers have tested stablecoin transactions. Governments have studied central bank digital currencies. And now, cross-border transfer firms are increasingly looking at blockchain as a way to reduce costs, improve settlement speed, and remain competitive in a rapidly evolving financial environment. Cross-border payments have historically been one of the clearest use cases for blockchain technology. Traditional international transfers can involve multiple intermediaries, high fees, slow processing times, and currency conversion complications. Blockchain systems, by contrast, can potentially enable faster settlement, lower operational costs, and more transparent transaction tracking. That does not mean every blockchain solution will succeed, but it explains why companies operating in global payments continue exploring the technology. Western Union's growing blockchain focus comes during a period when competition in the remittance market is intensifying. Digital payment companies, fintech startups, and crypto-native firms are all competing for a share of the international transfer business. Consumers increasingly expect faster transactions and lower fees. In many regions, younger users are becoming more comfortable with digital wallets and blockchain-based financial tools. For legacy firms, adapting may no longer be optional. This is also one reason XRP and blockchain payment networks have remained central topics in the crypto industry. Supporters of blockchain-based payment systems argue that distributed ledger technology can modernize global settlements in ways traditional systems struggle to achieve efficiently. Critics continue raising questions around regulation, scalability, and adoption timelines, but the underlying demand for faster and cheaper global transfers remains very real. At the same time, another part of the crypto market is drawing enormous attention for completely different reasons. While institutional blockchain adoption is shaping one side of the story, speculative momentum is building elsewhere around high-risk, high-reward tokens that investors hope could become the next breakout winners of the cycle. And among the names increasingly appearing in crypto discussions is Pepeto. Pepeto's rise reflects a familiar pattern that often emerges during bullish market phases. Once Bitcoin begins strengthening and investor confidence returns, capital frequently rotates towards smaller and more speculative assets in search of larger percentage gains. Bitcoin may deliver stability relative to the broader crypto market, but many traders begin looking beyond the largest assets once momentum accelerates. Historically, that search for higher returns has fueled explosive moves in altcoins and emerging tokens. According to growing market discussions surrounding the project, Pepeto has attracted attention because of its rapid growth compared with recent performance seen in Bitcoin and Ethereum. Supporters claim the project is benefiting from strong community engagement, speculative momentum, and broader interest in meme-inspired digital assets that combine viral branding with crypto market narratives. The meme coin sector itself has become one of the most unpredictable but influential areas of the digital asset market. Earlier cycles demonstrated how quickly internet-driven communities can transform relatively unknown tokens into billion-dollar assets. Projects like Dogecoin and later meme-inspired cryptocurrencies showed that market psychology, online culture, and social momentum can sometimes drive enormous valuation swings regardless of traditional financial analysis. However, this sector also carries substantial risk. Meme-related projects are often extremely volatile, highly speculative, and sensitive to shifts in sentiment. Some experience rapid growth before collapsing just as quickly. Others fail to maintain long-term utility or sustainable development. Investors entering these markets frequently face sharp price swings and unpredictable trading conditions. That distinction is important because much of the excitement around emerging crypto projects tends to accelerate during periods of broader market optimism. When Bitcoin rallies, risk appetite often increases across the sector. Traders begin searching for assets capable of outperforming the market leaders. That dynamic can create extraordinary gains for some projects, but it can also amplify speculative excess. Still, Pepeto's growing visibility highlights something larger happening inside the crypto ecosystem right now. Investors are once again willing to take aggressive positions in projects they believe could deliver asymmetric returns. That shift in behavior often reflects improving market sentiment and increasing confidence that another expansion phase may be developing. One reason this matters is because crypto markets are deeply influenced by narratives. Technology plays a role, fundamentals matter, adoption matters, but investor psychology frequently drives short-term momentum. During bearish periods, markets focus on regulation, risk, and collapse scenarios. During bullish periods, attention shifts toward innovation, growth potential, and emerging opportunities. Right now, several narratives are converging at once. Institutional adoption is growing, Bitcoin is strengthening, blockchain payment systems are gaining credibility, and speculative capital is returning to smaller projects. Together, those trends are creating an environment many crypto investors recognize from previous market cycles. To understand why this matters, it helps to look at how crypto bull markets typically evolve. Historically, Bitcoin often moves first. Institutional capital and large investors tend to concentrate there because Bitcoin remains the most established digital asset. Once Bitcoin gains momentum and confidence improves, Ethereum and large-cap altcoins usually follow. After that, speculative activity often expands into smaller-cap projects, meme coins, and emerging ecosystems. That process does not happen identically every cycle, but the pattern has repeated often enough that traders closely monitor it. The renewed interest surrounding projects like Pepeto may therefore be interpreted by some investors as a sign that speculative appetite is returning more broadly to the market. At the same time, macroeconomic conditions are also influencing crypto sentiment. Investors continue watching interest rate policy, inflation trends, liquidity conditions, and global economic uncertainty. Crypto markets are no longer isolated from traditional finance. Institutional participation has connected digital assets more closely to broader economic trends than ever before. When liquidity expands and investor confidence improves, risk assets often benefit. Technology stocks, growth investments, and cryptocurrencies can all experience increased inflows during those periods. Conversely, tighter monetary conditions and economic uncertainty can pressure speculative markets. That is why many analysts continue monitoring central bank policy, alongside crypto developments. Another important factor is regulation. The crypto industry spent years operating in uncertain legal territory across many jurisdictions. Recently, however, clearer regulatory frameworks have begun emerging in some regions. While debates continue over how digital assets should be classified and governed, greater regulatory clarity can reduce uncertainty for institutional participants. Large financial firms typically avoid markets where rules remain entirely unclear. As frameworks develop, institutional involvement becomes more feasible. That does not guarantee immediate adoption, but it lowers barriers that previously limited participation. Western Union's blockchain-related positioning may therefore reflect broader confidence that blockchain infrastructure is becoming increasingly integrated into mainstream finance. The company is not alone. Financial institutions worldwide are exploring tokenization, digital settlements, stablecoins, and blockchain payment rails. Some initiatives will likely succeed while others may fail, but the direction of travel is becoming increasingly difficult to ignore. For crypto investors, this creates an unusual market environment where long-term infrastructure development and short-term speculative trading are advancing simultaneously. On one side, global payment systems are modernizing. On the other, meme coins and high-risk tokens are capturing enormous attention online. That combination may seem contradictory, but it has become a defining feature of crypto markets. Serious institutional innovation and highly speculative trading often coexist within the same ecosystem. Investors therefore face the challenge of separating durable long-term developments from short-term hype cycles. And this is where understanding market structure becomes essential. Bitcoin and Ethereum remain dominant because they benefit from liquidity, network effects, institutional recognition, and extensive developer ecosystems. Smaller projects attempting to outperform them usually rely on momentum, niche communities, or rapidly growing narratives. Some eventually mature into larger ecosystems. Others disappear after speculative enthusiasm fades. For newer investors entering the market during bullish periods, distinguishing between those possibilities can be extremely difficult. This is especially true during phases when headlines focus heavily on massive percentage gains. Stories about tokens delivering extraordinary returns naturally attract attention, particularly when compared with slower growth in larger assets. But historically, markets rewarding extreme gains have also produced significant losses for many participants. That reality does not eliminate opportunity. It simply reinforces the importance of understanding risk. Pepeto's recent momentum demonstrates how quickly investor attention can shift toward emerging projects once market sentiment improves. Online communities, influencer discussions, trading activity, and social engagement can all accelerate momentum rapidly. In crypto markets, narratives spread globally almost instantly through social platforms and digital communities. At the same time, Western Union's blockchain direction highlights a completely different side of the industry: real-world infrastructure transformation. Unlike speculative tokens driven primarily by momentum, enterprise blockchain initiatives focus on efficiency, scalability, and operational improvements. Both stories matter because together they show how broad the crypto ecosystem has become. Crypto is no longer only about Bitcoin. It is no longer only about decentralized finance. It is no longer only about speculative trading. It now intersects with banking, payments, technology infrastructure, global finance, social media culture, and increasingly, institutional capital markets. That expansion is one reason the industry continues attracting attention despite periods of volatility and regulatory uncertainty. There is also another major development shaping investor expectations: the growing normalization of digital assets among mainstream audiences. Several years ago, crypto remained relatively niche outside technology and finance communities. Today, digital assets are discussed by major financial networks, global banks, governments, payment companies, and institutional investment firms. Exchange-traded products linked to crypto assets have also contributed to broader accessibility in some markets. Institutional investors that previously avoided direct crypto exposure now have more regulated entry points into the sector. That shift has strengthened the perception among many investors that digital assets are becoming part of the broader financial landscape rather than remaining entirely separate from it. However, increased mainstream acceptance does not eliminate volatility. Crypto remains one of the most unpredictable financial sectors in the world. Prices can move dramatically within hours. Regulatory announcements can shift market sentiment overnight. Social media trends can trigger massive speculative surges. And macroeconomic conditions continue influencing liquidity across global markets. This is why analysts continue emphasizing caution even during optimistic periods. Still, optimism is clearly returning to large parts of the market. Trading volumes have increased across several digital assets. Retail participation appears to be strengthening again in certain segments. And investor discussions are increasingly focused on identifying the next major growth narratives. Artificial intelligence integration, tokenized assets, blockchain payments, decentralized infrastructure, and meme ecosystems are all competing for investor attention. Some projects are attempting to solve real-world technological challenges. Others rely more heavily on branding and community engagement. In many cases, both elements combine together. Pepeto's rise reflects the power of narrative-driven investing within crypto markets. Supporters view it as an opportunity to capture early-stage growth before wider mainstream recognition. Skeptics caution that rapid speculative gains can reverse just as quickly. Both perspectives exist simultaneously in nearly every emerging crypto trend. And while much attention focuses on short-term price action, the longer-term transformation of financial infrastructure may ultimately prove even more significant. Western Union's blockchain strategy is part of a broader global trend where traditional financial institutions are reassessing how money moves across borders. The current international payment system, while functional, often remains fragmented, slow, and expensive. Blockchain technology offers the possibility of more direct settlement systems operating continuously without many traditional intermediaries. Stablecoins have also become central to this conversation. Digital assets pegged to fiat currencies are increasingly used for transfers, settlements, and trading activity. Some analysts believe stablecoins may eventually play a major role in global payments infrastructure because they combine blockchain efficiency with reduced price volatility compared with cryptocurrencies like Bitcoin. This area remains highly competitive. Banks, fintech firms, blockchain networks, and payment providers are all exploring different models. Regulatory frameworks will likely determine how quickly adoption expands. But the momentum behind digital settlement systems continues growing. That evolution also creates opportunities for blockchain-related ecosystems connected to payments, remittances, and financial infrastructure. Investors increasingly evaluate not only speculative potential, but also whether projects align with broader industry trends likely to see long-term adoption. At the same time, speculative cycles continue shaping market behavior in powerful ways. History shows that crypto markets often move through phases of excitement that attract large numbers of new participants. During these periods, social media engagement surges, trading volumes expand, and new narratives dominate headlines daily. Investors search aggressively for the next breakout asset capable of delivering exponential returns. This environment can create enormous opportunities, but it also increases emotional decision-making. Fear of missing out frequently drives late-stage buying during rapid rallies. Projects receiving intense online attention can experience extreme volatility as momentum traders enter and exit positions quickly. That dynamic may already be emerging again in parts of the market. Pepeto's visibility reflects how rapidly momentum can build around newer projects when broader market sentiment improves. Whether that momentum proves sustainable over the long term remains uncertain, but the project's recent attention demonstrates that speculative appetite is returning, and this may be one of the most important signals investors are watching right now. Not because any individual project guarantees success, but because renewed risk appetite often indicates growing confidence across the crypto sector more broadly. When investors become willing to move beyond Bitcoin and Ethereum into smaller cap assets, it can suggest they believe market conditions are improving enough to support higher risk opportunities. That shift does not confirm a full-scale bull market, but historically it has often accompanied stronger expansion phases. Meanwhile, institutional developments continue reinforcing the perception that blockchain technology is becoming increasingly embedded within global finance. Payment systems, asset tokenization, decentralized settlement infrastructure, and digital identity frameworks are all areas receiving growing attention from both private firms and governments. Some analysts compare the current stage of blockchain adoption to the early internet era, when infrastructure development initially attracted limited mainstream attention before eventually transforming global communication and commerce. Others argue crypto markets remain too speculative and fragmented to achieve similar long-term integration. The truth may ultimately lie somewhere between those perspectives. Certain blockchain applications may become foundational components of future financial systems. Others may disappear entirely, and many projects competing today will likely not survive long-term consolidation. For investors and market observers, the challenge is determining which trends represent durable structural change and which are primarily driven by speculative enthusiasm. Western Union's blockchain involvement strengthens the argument that at least some parts of the financial industry see distributed ledger technology as strategically important. Legacy firms rarely invest substantial resources into technologies they view as entirely temporary. At the same time, speculative projects like Pepeto highlight how crypto markets continue rewarding narratives capable of capturing public attention quickly. These two forces, institutional infrastructure development and retail-driven speculation, are now evolving simultaneously. And together, they may shape the next phase of the crypto market. Another factor influencing current sentiment is generational change among investors and consumers. Younger demographics are generally more comfortable with digital financial tools, online assets, and decentralized technologies than previous generations. Mobile-first finance, digital wallets, and online trading platforms have become normal parts of financial behavior for millions of people worldwide. That shift affects how financial companies position themselves strategically. Firms that fail to adapt to changing consumer expectations risk losing relevance over time. Blockchain technology, digital assets, and tokenized systems are increasingly viewed not only as investment opportunities, but also as potential components of future financial infrastructure. This broader transition may help explain why traditional firms continue exploring blockchain integration despite regulatory complexity and market volatility. It is also why crypto markets remain so closely watched by both institutional and retail investors. The industry represents not only a speculative asset class, but also a potential technological shift affecting payments, settlements, ownership systems, and digital commerce. And during periods when both institutional adoption and speculative momentum accelerate together, market attention intensifies dramatically. Right now, many investors believe conditions may be aligning for another major crypto expansion phase. Bitcoin's strength, growing institutional participation, blockchain integration efforts, and renewed interest in smaller cap projects are all contributing to that narrative. But experienced market participants also understand that crypto cycles rarely move in straight lines. Volatility remains inevitable. Corrections can occur suddenly, sentiment can reverse quickly, and projects experiencing explosive growth can face equally dramatic declines. This is particularly important in sectors driven heavily by speculation and social momentum. Meme-related assets can generate extraordinary returns, but they can also expose investors to significant risk if enthusiasm fades. That is why many analysts continue encouraging balanced approaches focused on risk management, research, and long-term strategy rather than purely emotional trading decisions. Still, the market's current direction is attracting growing attention for a reason. Institutional firms are moving deeper into blockchain infrastructure. Global payment systems are evolving. Speculative appetite is returning. And investors are once again searching aggressively for the next major crypto opportunity. Whether Pepeto ultimately becomes a lasting success story or simply another short-term momentum cycle remains to be seen. But its rapid rise demonstrates how quickly investor attention can shift when broader market optimism returns. Meanwhile, Western Union's blockchain positioning reinforces the idea that digital asset technology is continuing its gradual integration into mainstream financial systems. Together, these developments suggest the crypto industry may be entering another important transition period, one where institutional infrastructure and speculative innovation continue colliding in ways that reshape markets faster than many expect. And if that process accelerates over the coming months, the competition for capital, attention, and technological leadership across the crypto ecosystem could intensify dramatically. For investors, traders, and market observers, the key question may no longer be whether blockchain technology will remain relevant. The more important question could be how deeply it ultimately integrates into the global financial system, and which projects position themselves successfully as that transformation unfolds. Because while Bitcoin remains the foundation of the crypto market, history has repeatedly shown that each new cycle creates entirely new winners, new narratives, and new opportunities. And as institutional adoption expands while speculative momentum returns, the next chapter of the crypto market may already be starting to take shape. That is why developments like Western Union's blockchain push and Pepeto's rapid growth are drawing so much attention right now. They reflect two powerful forces reshaping the industry at the same time: real-world financial transformation and aggressive investor speculation. Whether those trends continue accelerating will depend on regulation, market liquidity, investor confidence, and broader economic conditions. But one thing is becoming increasingly clear: crypto is no longer operating on the fringes of finance. It is becoming part of a much larger global conversation about the future of money, payments, and digital value itself. And if current momentum continues building, the coming months could become some of the most important the crypto market has seen in years. Thanks for watching XRP News. If you enjoyed this coverage, make sure to subscribe, turn on notifications, and stay with us for the latest developments shaping the future of crypto, blockchain technology, and global finance.